Okay guys, in this video, I'm gonna go through a step-by-step breakdown of this A+ setup. Of course, I called this setup in advance inside of the Pro Discord. This was such a good setup, guys. I had to make its own video for it. This is like a picture-perfect A+ setup. I will take this trade 100 out of 100 times, and anytime that you guys see this exact setup, have full faith and confidence that this will be a winning trade in most cases, okay? There's, of course, going to be that occasional loss where this doesn't play out, but the probabilities are definitely on your side. So let's jump into it, okay? So this was a long position that I took on Hype USD. I'll post the before on the screen here so you guys can see that this was a setup that I was looking at for multiple days in advance, actually. All right, really quickly, guys, before we jump into this video, if you guys want access to my own custom trading algorithms, as well as get access to my daily setups and analysis, make sure to click the first link in the description below. If you're a struggling trader, you're not yet profitable, or you still don't have a system in place, I can help you out. Again, it's gonna be the first link in the description below. Let's jump into the video. So this is like clockwork, guys, okay? The first thing I'm gonna do is mark out my key level. I'll start from scratch here on the Hype USD chart on the 4-hour time frame. Now, the difficult thing about this pair in specific is that there's not that much price history. Okay, let's go to actually Hype USD, get as much history as we can. Okay, so we're gonna go to like a daily time frame here, remove all of our drawings. The only kind of price history that I can see here is this major order block here on a daily time frame. So by order block, I just mean area of consolidation. I can see back here we had this previous high. Oh, what is that? We have this previous high, okay, and this previous low, and this little mini range that we had broken out of. So this is going to be our higher time frame order block. Now, all this does is add a sense of confluence when we drop to a lower time frame, telling us that, okay, on a higher time frame, we are at a demand zone. We can expect some move up on a lower time frame. So I don't normally use order blocks or consolidation areas or any of that sort, but that was a pretty decent bit of confluence. Next, what I want to do is drop to a 4-hour time frame, go into replay mode here, and we want to draw out our key levels, okay? Our key levels with price history, meaning price has reacted to these levels multiple times in the past. If I just draw my general zone here, I can see that this level had acted as support, resistance, resistance, and is currently approaching this level as resistance once again. Okay, so we're gonna let price play out. Something else to note here, okay? Although we have this key level with price history, this doesn't mean we want to look for shorts here, and it doesn't automatically mean we want to look for longs on a retest. We want to look for multiple pieces of confluence. Okay, I can see here, coming down to this local bottom, we had many bullish divergences on our easy oscillator, telling us that price will most likely see some sort of bounce, at least in the short term, which we had seen. Now it looks like we're putting in our higher low. So we always want to use market structure in confluence with any trading strategy that we're using. So it looks like we're making a higher low, but until we see that higher high confirmed, for all we know, this might just be a lower high here, forming this kind of pennant pattern, and we may break to the downside. So we need to see that market structure break above with displacement to confirm that this is indeed a higher low to be put in. So at this point, guys, we're not taking any trades. We have our key level, but we're not taking any trades in specific. So boom, we close above that level, retest. Now, personally, guys, I do not like to take instant retests, meaning if we have a resistance zone like we're seeing here, I do not like to see an instant retest. I want to see a clear break above with displacement and then a retest, okay? So that's currently what I'm looking for. Now, something else I can note here. We're going to let this play a little bit further, okay? We see a bearish candle. If I draw my golden pocket from the local swing low to that swing high, I can see that we have this golden pocket perfectly overlapping our previous structure high here. So I can see here, mark out this level. We have this previous level that acted as resistance, support, resistance, and we flip this level back into support. Now, the reason that I'd be looking to take a trade at this level, okay, as opposed to this key level, is because there is more confluence at the golden pocket. One of my trading rules is that I will not take a trade unless price is at the 0.618 Fibonacci retracement level, otherwise known as the golden pocket, or below. I will only long in discounted zones. I will not take a long if price is above that golden pocket fib. So now I have multiple pieces of confluence here, okay? Because I have another key level that I've drawn out, a previous structure high. This is the most recent high before we created that continuation to the upside, or that continuation break to the upside. That is the most previous structure high that price oftentimes likes to retest. We also have a bullish order block here. We have our local golden pocket. We have our key level. So a lot of pieces of confluence here telling us to take that long position. And also, structure is clearly bullish. We have created that higher high here, confirming that bulls are now in control. We can now start to look for long positions, okay? And if we're using Elliott wave, which now we're getting a little bit advanced here, but this would be the 1, 2, 3, 4, and we'd be looking to take that long for that 5th expansive wave to the upside, okay? All in all, this is a really good setup forming. Now, do we just want to set a limit order here at the Golden Pocket? Personally, no. And especially in these market conditions where Bitcoin is kind of chopping, I need to see a reaction on a lower time frame. So what I'll do at this point is I'll actually drop to the 1 hour time frame. Okay, I'm going to let price play out, and I want to see price come down to this level, okay? Now, when I see price come down, I do not want to see an aggressive move down, okay? So if we were to have seen something like this, okay, if we would have seen something like this, we had one massive bearish candle instantly dropping to the zone, I would not look to take the trade. I only want to take the trade if there is a corrective pullback. Okay, so this gets into the 2 types of pullbacks, right? 2 types of pullbacks, right? There are the aggressive, okay, aggressive pullbacks, which we do not want to take a trade, okay, no trade. And then we have the corrective pullbacks, okay? Corrective pullbacks, otherwise known as like an ABC correction, okay, that's where you get the corrective pullback from, would mean trade. And then we have a sweeping pullback, which is actually a type of corrective pullback, okay? So that's a type of corrective pullback. I'll make another video on all the types of pullbacks in the future. But all you need to know is when price is coming down to your level, you want to see this very nice, delicate, soft landing into your level. You don't want to see one major dildo candle into your level, right? Does that make sense? You want to see multiple candles coming down softly, you know, ABC correction down. You don't want to see just one massive fat black dildo candle down. That's not a trade we want to take, okay? Makes sense. We don't want to take a trade on a massive black dildo candle, okay? We want to see that corrective pullback down, and then we can start to look for entries on a lower time frame. In this scenario, right, we have our golden pocket marked out here. We have our key level. Price bounces from our key level. Okay, we can clearly see that price is currently in real time bouncing from our key level. However, it did not fully tag that golden pocket. So what does that mean, guys? It means you don't take the trade. It means we do not take the trade until price comes down to this local golden pocket. But in this setup, we have done something really, really nice here, because now we have this level of liquidity sitting right above our main point of interest, which is going to be our golden pocket. Okay, we have this low here right above this local golden pocket. So this is an A+ setup. Whenever I see this, guys, it adds so much more confidence to my trade. Now, if you're wondering what I'm talking about, if I have a point of interest or a demand zone or a key level with the Golden Pocket Fib, okay, let's say this is my key level here, okay, something like this. This is my zone. Anytime price breaks above this level, okay, and I'm looking for a retest, and it comes down to this level and just misses that level, I am not going to FOMO enter a long position. On a long enough time frame, you will not be a profitable trader doing this. Instead, what I do is wait for a sweep of that level. Now there are multiple pieces of confluence telling me to go long, because not only do I have my main point of interest, my main key level, I also have this liquidity low here. Okay, I have this liquidity low overlapping that level. Okay, so as soon as price sweeps this low and reclaims this level, that's when I can look for a long position. So this is a really high probability setup when you see that you have liquidity resting just above your key level or your key point of interest. So at this point, guys, I'm literally just waiting for a sweep of this level and a reclaim of that low for the long position. Okay, we're gonna let price play out. We can let price consolidate. That's totally fine. Again, we're not FOMOing in. We're waiting until we get a retest of that golden pocket. Okay, we're waiting. Price is going up, consolidating. Boom. That's your entry right there. So to find an entry, what I do is drop down to a 15-minute time frame, 15 to 5-minute time frame. But for you guys, I'd recommend a 15-minute time frame. Boom, sweeps the low. Okay, sweeps the low right here, reclaims that low. We want to see some bullish reaction, bullish divergence on the oscillator. Okay, that is your final piece of entry confirmation. Stop loss below that low, and you're going to be targeting this high here as your take profit, if not higher. Okay, because you want to see that continuation move to the upside, okay? Like probably to these highs right here, right? To this resting liquidity all the way up here with this bearish fair value gap. That's probably gonna be your final take profit, right? You can scale half at these highs. Okay, so we're just gonna mark this out. Okay, we're gonna do scale 50% here, meaning take half your profit here and then scale 100% here. Okay, take the rest here. So again, we're gonna let price play out, and price just absolutely shoots up, hitting our take profits. That is a winning trade. That is how we do it, guys, okay? That's literally all there is to it. Now, will every setup you get be this clean, where you have, bullish divs, sweeping into that golden pocket, perfect reaction? Not every trade setup is gonna look like this, guys, right? Some are gonna be more choppy, but all you need, guys, right, is your key level with price history, meaning multiple reacts, okay? You need your key level of price history, you need your golden pocket fib, and you need to see that market structure is bullish and that you are continuing to make higher highs and higher lows with that corrective pullback. Finally, you want to drop down to a lower time frame. Okay, the final entry confirmation. Okay, drop to lower time frame, and then bullish divs. That's it, guys. That is it for this A+ setup. Most of you guys aren't writing down what you want to see in advance. You're not writing down your rules. You're not waiting for all of your confluences to be met. And you're wondering why you're an unprofitable trader. You're not patient enough to wait for that perfect setup. I only take 2 to 3 trades per week, guys. I'm not trading every single day. Why is that? Why am I not trading every single day? Because the market isn't presenting A+ setups every single day. The definition of an A+ setup is a perfect 10 out of 10 setup. You're not going to see that every single day. So for those of you guys that are rushing your trades, you're forcing trade setups literally every single day, try to dial back on the volume of trades. Only take high probability A+ setup trades when all of your confluences are met, okay? That's going to be it for this video. If you guys have enjoyed, make sure to leave a like on this video. Comment down below if I've helped you out. Make sure to click the first link in the description below to get access to the indicators on my screen here, as well as my own personal daily analysis and setups. That's going to be it for this video. I'll see you guys next time.